Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Bob Scarborough.
And we are
the
FAIRtax Guys. And I still have my big 11 by 11 cube. I haven't scrambled it up to the degree that I normally do because it takes so long to put it back.
Things in orbit.
Yeah, well,
solar system.
We haven't gotten to use this much since we're doing these by Zoom anymore, but it's still there. And it's
a conversation starter.
Yeah, it is. The income tax is still is
so complex. It's such a drain on innovation and entrepreneurship.
Yeah,
to look at the Rubik's Cube that big, it's like.
Yeah, well, I don't know. I've got another Rubik's Cube. You've got two characteristics of the Internal Revenue Service and the Internal Revenue Code. One is the complexity of it, and that's what the 11 by 11 here represents. There's another one, the instability in the tax code, and that is represented by my little Rubik's Cube where the colors change as you move it around in your hand. Right. So you can't, that's the only Rubik's Cube I can't solve because it keeps changing on me every time you move it.
Too funny.
Oh,
well, that's an interesting thought when you liken the Internal Revenue Service to a Rubik's Cube. You could also liken it to the time that you finally get somebody on the telephone at the Internal Revenue Service that your same question and may get 2 or 3 different answers depending on who you're talking to.
Absolutely. I remember when we took these Rubik's Cubes to CPAC a couple of years ago, back when we had a booth, and everybody walking by, especially the younger folks, wanted to pick them up and play with them. And again, notice that segue right into CPAC again.
That's right. And it's coming. Hey, CPAC is coming to Orlando, Florida. Mm-hmm. Don't know the hotel destination yet. Latter part of February. And we're going to work on getting 500 FAIRtax fans, supporters, volunteers in. What a great way to spend the latter part of February. If you're from any part of the country where it's super cold, you might want to consider this as a little vacation.
Which is about every place except Florida in February.
That's right.
So I know how cold it can be in North Carolina in February, so come on down.
Yeah. Oh, yeah. Well, we would always go to Daytona for the 500 and then come up to North Carolina to the North Carolina Motor Speedway there in Rockingham. And sometimes it was colder in Florida than it was in Rockingham. But those 2 weekends back to back, you better have a good jacket on for sure.
That's true. Well, I've seen the Rockingham races get snowed out before. So whatever. We're getting off track here, but we need to get as many people as possible. I'm not so sure that 500 is a realistic number, but it sounds like a good one. The FAIRtax 500 makes a neat case. But just think about it. Walking around 500 people in FAIRtax gear in front of all the political people that are down there and in front of all the media people down there. This is just a fantastic opportunity. Now, the only other events I can think of where there might be more media and more political people would be the party's nominating conventions.
Yes, absolutely.
So, but outside of the nominating conventions, if we're going to get the FAIRtax message in front of people that can help us, the CPAC is a wonderful place to do it, and I would just love to have, 500. I'll be happy if half of that shows up, but I'm still going to ask for 500 FAIRtax volunteers to show up, walk up and down Broadcast Row, walk into, I don't know if they'll let you carry a scrolling banner into the lecture hall or not, but we need to have it every time that somebody there at the Fox Nation booth looks up, there's somebody in FAIRtax gear walking by them.
Right, so, doing this.
Yeah, so check that out. February 24th through 27th. That's a Thursday through Sunday in Orlando. Let's see, we don't have the hotel yet. Hopefully they'll have that announced before long. But make your plans to come to Florida in February and help promote the FAIRtax to everybody that's going to be there at CPAC.
Absolutely. Well, let's not waste any more time. This is the other Bob's favorite time on the program.
Oh, yes, because we didn't get
Congress.gov. We need a sound effect for Congress.gov.
Oh, yeah, we'll have to come up with one. Maybe a toilet flushing or something. Anyhow, we didn't get to do this last week because we were talking to Mike Saliba, and so anytime we can talk to a candidate pledge signer, we'll put Congress.gov on hold for a week. But then I get withdrawal syndrome, and we have to come up with something. I did remember to look this time. 1,365 hits on the search. Now, again, what we talk about, you go to Congress.gov, you put the words Internal Revenue Code in quotes, so you're searching on that whole string. Be sure that you've selected only the 117th Congress legislation therein. And that search, as of the day we're recording this, brings back 1,365 hits, one of which is H.R. 5920, to amend the Internal Revenue Code to allow tax credits to veterans for the establishment of franchises. Now, that's something that sounds nice. Who wouldn't want to help veterans? But the point is, when you start picking out, well, if you're going to help veterans, how about police officers? Or, well, if you're going to do veterans and police officers, how about teachers? There's always worthy groups that are, worthy of support and help. And when the tax code starts picking out who gets breaks and who doesn't, then somebody's going to get left out, and that's not right.
And if you have the free market working for you, then you'll have, and especially with the FAIRtax in place, actually supercharging the economy. Folks can innovate, and then you can go out and say, hey, let's help. If the veterans need something going on in a particular area, you can super focus on the needs there on a local level.
Yeah, but anybody that has the entrepreneurial spirit and wants to get into there would benefit from the FAIRtax. Because, you talk about making the United States, the most tax-friendly haven on earth, FAIRtax will do it. And you talk about drawing entrepreneurs to American soil, that'll do it. And you'll have an environment, and you'll be looking at double-digit growth in the economy.
Absolutely. What is it, 13 or 14 trillion dollars sitting overseas in offshore accounts that protect it from certain taxes here in the United States would come back into our economy, and start to work.
So again, if you want to help veterans or anybody else start a business in America, pass the FAIRtax and that'll get it done. Let's move on here. S3191. This is a cool one. The bill to amend the Internal Revenue Code to provide for flexible giving accounts and other purposes. Do you have any idea what that is?
No, but I bet you they know.
No, Actually, I looked this up. A flexible giving account is not really an account that money accumulates in, but it is still similar in nature to contributing to your 401k. What it is you can go to your employer. When this passes, you can't do it yet, but if this passes, you can go to your employer and have a pre-tax payroll deduction made that will go directly to a tax-exempt charitable organization. In other words, it lets you give to your charitable organizations with pre-tax dollars.
That's interesting. That's not bad. That's not a bad way to do things. But what does it got to do why does it need to be in the tax code to do that?
Yeah. Why does it need to be in the tax code? If you had the FAIRtax, everybody would be giving with pre-tax dollars because there'd be no such thing as after-tax dollars.
That's right.
You get to keep all of your money. As Marissa Selvig's 13-year-old says, I can keep my money with the FAIRtax.
That's right.
We'll keep an eye on this one.
Very simple. It's a simple process. Get your check, cash it, put it in the bank, save it, spend it. You only get taxed when you spend those dollars.
Yes. Okay. This is S3173, a bill to amend the Internal Revenue Code to provide special rules for personal casualty losses arising from major disasters. Boy, that's really necessary for funding the government, isn't it?
It works, for somebody. I mean, it's got to be. I mean, the thing about those things is that a lot of them don't see the light of day past being offered in this particular session, in whatever session the congressman has brought it up. They just come in, but they don't really go anywhere, or do they?
I know, but that's Senator John Kennedy from Louisiana's bill, a place that gets hit with hurricanes. So I can see why they'd be interested in helping people after major disasters. But again, you don't need a tax code that does that. Pass the FAIRtax and let everybody take care of their stuff without any kind of pre-tax penalties or all that kind of stuff.
Does the tax code just become sort of an easy way to get these things started? And how do you wean the Congress critters off of using the tax code in that way, short of the FAIRtax?
Yeah, you get rid of the whole tax code and replace it with a FAIRtax. Now, here's another one, the H.R. 5838, to amend the Internal Revenue Code to provide for the indexing of certain assets for purposes of determining gain or loss. The tax code has to help you decide whether you've gained or lost in a particular investment. You need to run that by some of the investment advice guys that are on WTOB on Sunday morning.
Hey, I'll do that. I'm going to absolutely do that. We'll report back.
All right, and one more. This is another one where the title just reaches out and grabs you. HR 5833, the Equine Tax Fairness Act. Yeah. I see you're dumbfounded with that one.
I'm sitting here thinking, how do they come up with these names, first of all? But at the same time, that somebody has to be passionate about this, or somebody has come to a particular congressman in the area where the interest lies, and approaches them to do this.
Yeah, you could look. The Equine Tax Fairness Act could mean that different types of horses are getting their fairness, that they're paying tax. No, they're really not. It wouldn't surprise me, though, that if a lot of these racehorses, in Kentucky and Florida are the places that really are known for breeding racehorses. Yeah. This bill came out of Kentucky. That they start taxing the racehorses as well as the owners. But there was some text in this one. It says to amend the Internal Revenue Code to modify certain provisions related to horses. It talked about a Section 2 reduction of holding period to 12 months for the purposes of determining whether horses are Section 1231 assets or not. So you need the tax code to define whether a horse is an asset or not. And then a 3-year depreciation on racehorses. I guess racehorses have fairly short racing careers, and they retire to the farm and, start producing offspring and making millions of dollars that way. But there we go. Does
that fall into the same category of like taxing your capital gains before you actually realize it? You have a horse. If your horse is going to win 10 races over the next 3 years,
oh yeah, well, of course, we're surrounded by horse farms down here in this section of Florida where I'm at, and
in the middle of North Carolina too. There are.
So that's it. But that's our Congress Critter Craziness report for this week on FAIRtax Power Radio. There will be more next week, no doubt about it, because the Congress Critters just cannot help themselves when it comes to messing with the tax code.
I'm going to ask a couple of people that I know that are in the House of Representatives, what's the attraction to the tax code to move all these things forward? Why does it have to be in that order? Why is that part of the process?
I'd ask
into law.
I'd ask him a more direct question. What is it about the income tax and the IRS that you love so much?
Well, that would be the second question. I would sort of lull them into a sense of ease, where they think they've got an easy question to answer. But I mean, you think about it, it's been going on a long time, and it seems that over time they've figured out that this is a quick way to get things done. I would say money has probably a lot to do with it, and so. But yes, the direct question is, where does the tax code have to continue to be a part of our of the way we do things in Washington?
Okay,
and certainly in terms of our privacy within our own activities, whether they be financial or personal.
Okay, that's your next assignment, to go take care of that and bring a report back to FAIRtax Power Radio before too much longer. But yes, we've always encouraged listeners to send us questions. We've answered a lot of questions in the past several episodes of FAIRtax Power Radio. Seems like it was a pledge signer interview, then a listener question, then a pledge signer interview, then a listener question. I'd be happy just doing that for the rest of the year. But someone, and all we've got is his YouTube name. I don't have a real name on this person, but did you see the comment that was left a week or so ago on an old FAIRtax Power Radio episode that Ron and I did about the prebate?
Yes, I did. He says the prebate figure, it seems a little low, less than $700 a month. Basic living beyond rent mortgage is definitely higher than that for a single person, much less a family of four, depending on what is considered basic life expenditures. What makes a list, what doesn't? What is exempt from the sales tax? The complete answers to these kind of makes or breaks the FAIRtax concept for this commenter.
Yeah, so he was just asking, where did you get your prebate figures? We quote that every now and then. A family of four under the 2021 prebate schedule would get like $668 a month. in prebate. But this, I don't know if it's a gentleman or a lady. Mars 54 is was the screen name. He says, well, that seems like low. You can't provide all of your basic necessities for $700 a month. And it seems to be, and I guess we maybe need to explain this, that the prebate is not an entitlement designed to provide all of your basic necessities for you. Can you imagine if the government got into that kind of business and says, all right, we're going to provide everybody's basic necessities, 100% of the cost and free? Can you imagine what the lobbyists would do with that one, trying to get what's defined a basic necessity and what isn't?
Right. Well, I'd like to take a trip to Hawaii. Is that a necessity? And at what point do I say, okay, I think I probably need to put the food in the refrigerator before I'm thinking about spending my money on a trip?
Yeah, that Hawaiian trip is necessary for my emotional well-being. I'm just spent at work and stuff like that. But anyway, I hope Mars 54 is watching or listening here. But no, the prebate never is, never has been, and never was an entitlement program designed to cover the entire cost of everyone's basic necessities. What it is a tax refund that makes sure that you don't pay taxes on your basic necessities. You still have to buy them, but you're not taxed on the purchase of your basic necessities. There are no exemptions to the fair tax, and there is no definition as to what's a necessity and what's not. So the $64,000 question to you, Mr. Scarborough, is how does the fair tax determine what's a basic necessity?
It's not up to the fair tax to determine that. You have to choose that. Yeah, we have to decide. We get to decide what we spend our money on. It just so happens that the prebate washes up to the poverty level any taxes that are spent at the cash register on whatever you choose to buy first.
Yeah, well, that was kind of a trick question I was throwing at you there. Your basic necessities, by definition, are what you decide to spend your money on first. You know, if you have a limited amount of money to spend, most people are going to buy groceries and pay the rent and pay the electric bill before they take off to Hawaii.
Yes, exactly.
So again,
true, very true. And that's why we talked earlier in a previous episode about the low income families that are getting squeezed right now by the inflation numbers that are coming in. Everything's costing a little bit more. The dollar doesn't spend quite like it did, even 6 months ago now. Mm-hmm. Availability of an increase, say, in a person's paycheck is not necessarily going to calculate out to enough money to cover the increases that are taking place on the cost of hamburger, or a gallon of milk or a gallon of gas. So,
and the beauty of reimbursing the taxes that you pay on your spending up to the poverty level is that you get to decide what's a basic necessity and what's not. Can you imagine, again, the debate that would break out if somebody says, well, my Budweiser is basically a basic necessity, yes, and therefore you should not be taxing my beer or Coors or Miller or whatever else you might want to get. But is beer a basic necessity? Well, for some people, it probably is. And for other people, they would argue that it's not. But under the fair tax, you get to decide for yourself if you spend your money on it. And, it's your poverty level spending. Yeah, it's a necessity for you. And the fair tax prebate will cover that.
We are so challenged sometimes. I think we're so conditioned, I think is the word I'm looking for, in the cycle of the income tax, where mm-hmm. The money gets pulled out every month out of our paycheck. The government has it as from a cash flow standpoint. And then April 15th, we reconcile and we get a lot of money back. And then you see the activities, used car sales, buy a new mattress, take a quick vacation. What are you going to spend your tax refund on, and that kind of thing. So we're in this mode of thinking about this. And when you stop and think about the fair tax and how it can just absolutely put everything thinking in that way, how we are going to operate, you're going to have through the prebate a certain amount of money coming back to you, but then you get to decide not only what you spend out of the prebate, but what you spend beyond that in terms of your from your income. So the amount that you actually spend in terms of taxing events at the cash register, new items, services, things that fit into the category like that. Brand new car. If you want to buy a brand new car, well, guess what? You're going to spend a tax on that. Buy a used car, you don't have the tax is not going to be there. Same goes for clothes and things like that.
Yeah.
Used houses.
So in a nutshell, the fair tax does not tax your spending on basic necessities, but it leaves it up to you to determine what those basic necessities are by what you spend your money on. So real quickly, let's run through the figures here one more time in case somebody hadn't got it. The federal poverty level, by definition, is what the government has determined the level of money it takes to provide basic necessities. It varies by household size. It takes more to raise 4 kids than 1. And again, for 2021, the poverty level for a family of 4, we use that as our example a lot, $34,800. So the fair tax rate, again, is 23% inclusive, meaning for every dollar you spend, 23% of it is fair tax. So if you say you're going to spend $3,840, you know exactly to the penny how much fair tax was collected on that level of spending, which just happens to be $8,013. And the prebate rebates back to you that $8,013 that you paid on that level of spending, which we assume you will spend on basic necessities before luxuries. So that's how that goes. And that all breaks down to $668 a month for a family of 4. It's not an entitlement to buy your basic necessities. It's a tax refund to make sure that you have not paid tax on your basic necessities.
Exactly. You want to remember, too, that the fair tax gets rid of federal withholding and the payroll taxes. Now, that payroll tax is a wallop because there's no getting around it. Everybody pays it. Your employer is going to pay half. You're going to pay the other half. So it's a benefit to businesses too in that regard. But all that money gets put in your paycheck. The top number, you start to get that. You get the top number. Your state is still going to withhold whatever they're going to withhold, but you'll get a lot more money in your paycheck every week or every couple of weeks, however you get paid. You get to keep that paycheck, all that money, in addition to receiving the monthly prebate. So you have to figure that percentage in. So you're actually getting the prebate plus what you're not getting now with the withholding at the federal level.
Yeah, well, even the employer half of those payroll taxes, that's still what it costs an employer to have an employee. And if the employer did not have to pay that, that's money that could be paid to the employee, which they would bring home in their entirety with a fair tax.
Right, exactly. So it's an instant raise at the flip of a switch when the fair tax is enacted and how it is implemented and turned on. You need to look at your paycheck stub this week, and you need to say, okay, well, let me think about this for a minute. If I didn't have this coming out, and I didn't have this amount of money coming out, the 2 lines that we talked about a minute ago with federal withholding and the payroll taxes. And plus you take the payroll tax number and you double it, and that's the number, that half of that is what the employer is putting in. And so you end up with that plus the prebate. So look at that stub and just do your own calculation and write it on a piece of paper, and your top number, what you supposedly get paid, your gross number, and then add the federal withholding in there and the number from the other half of the payroll tax. And that's what you'll be taking home, plus the prebate. The prebate just assures you, it ensures that you get taken care of, everybody.
But hopefully we've explained this to Mars 54 satisfaction, that it is not an entitlement that provides you all of your basic necessities. It just ensures that you don't pay any tax on your basic necessities.
That's right.
So hopefully that works pretty well. And of course, hopefully if Mars 54 is watching or listening and still has further questions, you can write us at thefairtaxguys@gmail.com. Of course, you can leave your comment back there on that video. Again, we get notified every time somebody leaves a comment. So when you do that, we'll see it. But if there's anything more we can explain to you as far as that goes, we'll be happy to do it. All right.
I do want to make a mention, because here's Mars that's out there checking out videos from long ago. You can go to the YouTube channel and get a really good education
Yeah, FAIRtaxGuys.com. Now, people get confused on this. Our email address is thefairtaxguys@gmail.com, but our web repository, where all of our archived FAIRtax Power Radio episodes are, doesn't have the on it. It's just FAIRtaxGuys.com. And
that's a good place
I don't know
to
if you've seen it yet, but Mike Simmons got us a new picture that we put up on there, and we still need your bio.
Okay, I'm working on that right now.
Now that you've been publicly shamed into not...
As soon as I get my banner where I can reach it every time.
Yeah, he put up a little something about you, but we kind of need to get a little bit more on that if we can.
I'm just a hardworking guy and love the FAIRtax, and so there's my bio. All
right, well, we've got a couple of minutes left. We've got a couple of minutes left here on FAIRtax Power Radio. And again, let's remind everybody, if they didn't catch the beginning of the program, CPAC 2022 is going to be in Orlando, February 24th through 27th. That's a Thursday through Sunday. They have not announced the specific hotel yet, but you can still make your flight reservations. And it's really not all that expensive. The admission ticket to the conference itself is like $295. And you can spend more than that if you want to be a VIP and get some access to some things. But the conference cost is very minimal. And we need as many people as we can walking around in FAIRtax gear in front of the politicians and in front of the media promoting the FAIRtax. Let those guys know that it is not some fringe idea that just a few people support, that it is a really mainstream idea that needs to happen and needs to happen now.
And when I was talking a couple of weeks ago with one of our pledge interviews, they made a good point. Mm-hmm. And I always say, call 5 people, 5 of your friends, and let them know about the FAIRtax. Then he said, tell those folks that you just talked to go ahead and call their representatives. That 5 calls into the offices of your congressman is going to make a big impact. And if they start writing down notes, FAIRtax. Somebody else called about the FAIRtax today. And then all of a sudden they're going to start looking over and saying, wow, we really need to take a look at this, when it may not even be on their radar, possibly, but here's another way to go about it. And the opportunity to meet at CPAC is one of many opportunities that we have to get in front of a large group of people to talk about the FAIRtax. And I would encourage anybody that's out there that can make it down to Florida at the end of February next year to get in touch with us, thefairtaxguys@gmail.com, and let us know. We'll start putting a list together and work on the concierge, if you will, of how all that can come together.
I don't know how to go about doing this, but wouldn't it be great to see a breakout session at CPAC with Steve Hayes and Jade Wally explaining the FAIRtax to anybody that wants to come in there and watch?
Absolutely. Yes, absolutely. Well,
we'll have to work on that for CPAC 2023. They probably got their agenda for this one already done. But I tell you what, that's going to wrap up this edition of FAIRtax Power Radio. Once again, we're just having way too much fun. Time flies when you're doing that. So again, I'm Bob Paxton.
And I'm Bob Scarborough.
The FAIRtax Guys, again, reminding you that the FAIRtax is the only truly fair tax. And once you understand it,
you will demand it.
So, how much will I bring home?
Go ahead.
How much do you make? We'll just say 40,000. Okay, keep it simple, throw out the deductions, all that stuff. So, you got your 40K, right? Now, the first 8,000 is going to be taxed at 10%. The 8 to 33,000 is going to be taxed at 15%. And the 33 to 40, of course, is 25%. So, that brings your total to $6,345.
Okay, so the average is what?
16%. Okay, and then on top of that, you got Medicare, which is 1.5%, and then, of course, your Social Security, which is 6.2%. So, actually, your new total is $9,405.
Which is
23.65%. You're getting it. You're getting it. Don't even get me started on what the boss has to pay. He's got to pay a portion of your taxes as well, so you don't have to.
Right. And you?